Good morning, everyone, and a very warm welcome to you all and to our expert speakers. Our webinar today is on the UK Bribery Act and its implications for UK companies. For those of you who are not aware, the Bribery Act 2010 is one of the strictest legislations internationally on bribery and includes strict liability offences for companies and partnerships of failing to prevent bribery. Thus, it becomes imperative for all UK companies, especially those operating in India, to be fully up to speed with this legislation and take appropriate steps to make sure that they protect their business and employees. During this webinar, our experts from PwC in the UK and India will give an overview of the Act and its implications, discuss the general business landscape in India and its recent developments, and focus on some of the practical issues of operating in the Indian market using real examples. So before we begin, I would like to familiarize you with the toolbox on the right-hand side of your screens. Just to let you know, everyone will be on mute during the course of the webinar, but if you do have a question, please type it into the little bracket on your toolbox in the Please Type Your Question Here section to send this to me, and I will take it up during our Q&A session at the end. Now, I'd just like to introduce our expert speakers today. We're delighted to have Will Kenyon and Rahul Lalit with us. Both Will and Rahul are partners in the Forensic Services Group, Will in the UK, based in London, and Rahul in India. Will leads UK's forensic practice on anti-bribery and corruption issues and was also the lead author of TI's publication titled Diagnosing the Bribery Risk, focusing on conduct of effective bribery risk assessment. So as you can see, he has got a wealth of knowledge on this topic. Delighted to have you with us, Will. Rahul himself has a rich experience of conducting anti-bribery and corruption reviews, including investigations, due diligence during mergers and acquisitions, code of conduct review, and has 14 years of investigation in fraud diagnostic and auditing experience. So that's really impressive. And without further ado, I'll pass it on to our speakers to take you through the presentation. Thank you.
Thank you very much, and good morning, good afternoon, or good evening, depending on where you are in the world and when you're listening to this. I'm Will Kenyon, as you've heard, a partner based with PwC in London. And if we could have the next slide, please. Just very quickly, an overview of the session. I am just going to give a very brief recap of the Bribery Act. This session will not focus in detail on what the Act says. We're taking that as kind of assumed knowledge, and we really want to focus on the practical implications for businesses seeking to do business in India in the context of the Bribery Act and indeed in the context of the wider sort of global bribery agenda. So we'll have a little look at that and some of the trends going on in the UK and around the world in terms of legislation and enforcement. I'm then going to hand over to Rahul, who's going to focus us a bit on the Indian market, give us a sense of that as a business environment, talk to us a little bit about the legislative and regulatory regime as it relates to anti-bribery. And I think this is really the core of this session. Rahul's going to take us through some practical examples based on real cases of the kinds of issues, small and big, that you may face when doing business in India. And then I will come back just at the end in the last few minutes to pull some of the threads together, I suppose, and talk a little bit about risk management around ABC generally, how important risk assessment is, and how you connect your assessment of risk to your risk mitigation strategy and indeed your risk mitigation program. There will be sort of 10 or 15 minutes for questions at the end, and as you've heard, if you'd like to type your questions at any stage as we go along, then those questions will be fed to us, and we'll do our best to cover as many as we can, and any we can't, then perhaps we can take those offline with individual participants if they want to follow up on that. Okay, thank you. So if we could have the next slide. So this one slide really just captures a very brief overview of the points I want to talk to. I'm actually going to start on the right-hand side of the page with a very brief reminder of the Bribery Act, just to make sure we're on the same page. So as many of you will know, there are a number of offences in the Act: offence of active bribery, that's paying bribes or offering them; the act of passive bribery, that's receiving bribes or agreeing to receive some kind of inducement. There is a specific offence of bribery of a foreign public official, which of course will be highly relevant to any UK-based businesses doing business in India and dealing with government officials of one kind or another. Any bribery of such officials would certainly be captured by the Section 6 offence of bribing a foreign public official. And as was mentioned in the introduction, we then have this rather novel Section 7 offence, which is a corporate-only offence of failure to prevent bribery, and that I think is one that's been focusing many people's minds in terms of how to go about preventing bribery effectively. The penalties can be severe, and we are seeing in the UK an increase in law enforcement activity in this area. Just taking the global perspective for a moment, we've got the statistic from the 2014 OECD Foreign Bribery Report, where you can see this very bold statistic of $5.4 billion in monetary sanctions. That covers the period from the inception of the OECD convention in 1999 up to sort of the end of 2014. What is remarkable is the relatively low level of fines in the early part of that period, which and a huge uptick in sort of 2006, 2007 with some of the well-known cases in Europe, such as Siemens and Daimler Chrysler and so on. We are seeing also a significant increase in enforcement. And on that front, it's worth mentioning a couple of recent developments here in the UK that I think have wider implications. The first is, as you may know, there is now a deferred prosecution agreement regime in the UK, which has been used in anger for the first time in the recent case of Standard Bank. Standard Bank self-reported to the Serious Fraud Office in the UK that it had discovered evidence of bribery in Africa, in Tanzania, in relation to the winning of a contract with government to provide financial services support to the issue of government debt. Cutting a long story short, the upshot of that has been that Standard Bank has agreed to pay fines and disgorgements of $25 million equivalent, a further $7 million in restitution to the government of Tanzania, effectively repaying the fees that it earned in the first place, and it's also been required to pay some of the SFO's costs, amounting to about $330,000 equivalent. So quite a sizable fine, and that, it should be said, mitigated by the fact that Standard Bank had confessed very early on, showed complete cooperation throughout the investigation, and that has effectively earned it the right to negotiate a deferred prosecution agreement with the SFO, all approved by an English court, of course. The one further element of that is an ongoing independent review of compliance, which is part of the DPA arrangement, and I mentioned in passing that PwC are the people who've been appointed to carry out that independent compliance review. But an interesting development generally in terms of law enforcement here. The other matter is worth mentioning is the first conviction under Section 7 of the Bribery Act, that is the failure to prevent bribery. This in the case of Sweets Group. a construction company that again pleaded guilty to bribery of a Middle East-based insurance company that it was looking to win a contract with. Here the fines are of a somewhat more modest nature, but £2.25 million in fines and confiscation, plus another just under 100,000 in costs to pay, reimbursed to the SFO. In that case, individuals who were implicated in the bribery are still the subject of ongoing criminal investigation and potential prosecution. So that case is not over yet for those people involved, and that's quite an important point, that the Section 7 offence is a corporate offence, but it is based on the activities of individuals, and those individuals are not going necessarily to be protected from prosecution simply because the corporate admits guilt. So two quite interesting developments, and I think a sign that we are seeing an uptick in activity by law enforcement here in the UK, and I think that is a global, pretty much a global trend. One or two other things to mention. Our recent Global Economic Crime Survey highlighted bribery and corruption as very much in the top 3 of the most commonly reported types of economic crime. That's just been recently published, and I commend it to you if you're interested. And also some interesting research from Dow Jones about the amount that companies are now investing in proactive and reactive sort of anti-bribery measures, and I think that is a sign of the seriousness of this issue and the fact that companies see the need, but also one would hope the value in investing hard cash in avoiding the pitfalls. So with that general backdrop, I will hand over now to my colleague Rahul, who's going to focus us in on the Indian landscape.
Thank you very much, Will. Good afternoon, good morning, good evening, everybody. Well, I would like to talk about the Indian economic landscape and the excitement and the attractiveness which exists in the businesses today here in India. India, as you would know, is becoming an eye-catching destination for overseas investors. There has been a rising economic prosperity in the country. India is forecasted to grow at 7.6% in the current fiscal year, at a faster rate than the other emerging economies, and which is expected to accelerate to 8 to 10% in the next 2 to 5 years. Economists think that India will become the 3rd largest global economy by 2020. So definitely a lot of excitement here. FDI is now permitted in large number of sectors and across states. In fact, after the September 2014 launch of the initiative, which seeks to promote manufacturing and attract foreign investments, there has been almost 40% increase in FDI inflows over a 1-year period, and the FDI soared to over $45 billion during the financial year 2015. Investments by foreign institutional investors have also risen and expected to be their highest investments during the fiscal year of 2015. And UK as a country, interestingly, has become the largest investor in India amongst all the G20 major economies, accounting for almost 10% of all FDI in the country in India. A lot of key initiatives have been undertaken as well. You would have all heard about the Make in India initiative, which sets out to make India a hub of innovation and manufacturing. Over 25 sectors have been identified to make the country a real manufacturing destination, and India is seeing also a huge number of startups in the digital space. So this initiative really targets to make us a nation of job creators rather than job seekers. And with that, the government is also determined to make the country an extremely easy and a simple place to do business. Many many procedures, rules, regulations, etc., that have been built over the last 60 years is where government is now attempting to introduce transparency and clarity. Single window clearances and online tax filing systems are now being set up or being proposed in various states. Interestingly, the regulatory environment is also changing slowly. A number of new laws and regulations have come into force, and few others are proposed. The Companies Act, as you would all know, has defined the word fraud for the first time, and has now come out with the guidance of the thresholds beyond which fraud needs to be reported to the central government. This has, put additional responsibilities on board of directors and auditors of the company. New director tax code is being planned that will replace the income tax and other direct tax laws. And GST, of course, will have an impact on the way indirect taxes are levied in the country. As a result of all these initiatives, India moved 8 points up to rank 134 from a 142nd position amongst the 189 countries in the World Bank's ease of doing business sector ranking. So truly, I believe a lot of positivity in the Indian economic environment, and it's highly motivating for the businesses in the country. Moving on to the next slide. Talking about bribery and corruption, as far as regulations are concerned, on this front, India does have an existing anti-bribery legislation which is fairly strict, which is called the Prevention of Corruption Act 1988. There are other laws which surround the bribery and corruption provisions, which is the IPC, the Indian Penal Code, Right to Information Act, Central Vigilance Act, etc., to name a few. While all these laws exist, the enforcement of these laws is another matter which has been pretty dismal so far, but it is also changing slowly. And in an endeavor to promote good governance, the country has taken a number of initiatives towards containing corruption, including the amendment that is proposed in the Prevention of Corruption Act, which has been in fact drawn on similar lines as the UK Bribery Act. The new amendment proposes new corporate offences of giving bribe to a public official to gain a business advantage, and has got strict liability offence of the management participation in corporate offending, and this could impact both private and public sectors alike. It also aims at reducing the trial period for cases from an average of 8 years down to 2 years. The bill is pending in the upper house of the parliament and is currently being reviewed by a special committee that has been formed. So once it becomes a law, I'm sure it will have heavy ramifications, and definitely if enforced properly, it will do good to the business. Black Money Act also came into effect in last year, July, which aims to curb undisclosed foreign assets and income, and it imposes tax and penalty on such income. This, in fact, has been a very important development since black money is usually seen as a mode through which large cash payments are made for getting improper benefits. Certain private initiatives have also been taken, not just limited to the government initiatives. Transparency International India, which is a non-government, not-for-profit organization of Indian citizens with professional experience and social backgrounds who are seeking to promote transparent and ethical business. It largely works in the public sector in India as of now, and in fact close to 50 public sector undertakings have joined the Transparency International's Integrity Pact to reduce corrupt practices during procurement. There's another interesting website called IPaidAbribe.com. It is an initiative of an NGO called Janagraha to tackle corruption. Here, the citizens of the country can go on and report various types and natures and patterns of bribes and corrupt acts It has been launched in over 1,000 cities in India, and currently has got over 75,000 reports and a consolidated value of close to $350 million of bribe, which have been reported on the website. It has got very interesting links such as, I paid a bribe, I did not pay a bribe, I met an honest officer. So there have been certainly very remarkable and fascinating efforts that have been launched towards fighting corruption, and I'm sure more will come and gain momentum. Certain recent developments by the regulators have been another interesting aspect. So while enforcement of the Prevention of Corruption Act itself has been poor, but the regulators recently have taken note of various international actions that begun inquiries in India. The recent case, an example, a recent case in point is the Louis Berger case, where this New Jersey-based consultancy firm confessed in the court as part of the US FCPA proceedings that they had paid bribes of over $1 million to Indian officials to win consultancy contracts for water and sewage projects in India in 2010. In fact, the former officials of the company were called back for inquiries, and they have been arrested by the police, and they're now being prosecuted. It may be noted that these bribes were paid through third-party intermediaries, which are of high risk as far as bribery and corruption is concerned. The CVC, the Central Vigilance Commission, and CBI, which is an equivalent of the FBI, Central Bureau of Investigation, in India, in fact, have sent show cause notices and started investigations against Indian companies in India who are currently undergoing FCPA inquiries in the US. So the companies are now probably responding to those notices. In another recent landmark development, the Supreme Court of India has passed a new judgment that expands the scope of Prevention of Corruption Act, bringing all the private bank employees under the ambit of the Prevention of Corruption law, which so far has been applied only against the corrupt government officials. This really shows a step in the direction of the proposed amendment in this law. And all private organizations, especially those on whom strict international anti-corruption laws such as the UK Bribery or the FCP applies, they need to take special notice of this judgment because in addition to dealings with the government entities and officials, they will now need to include and monitor transactions with private banks as part of their anti-corruption compliance framework. So some very interesting work which has happened on the regulatory side. Moving on to the next section. Talking about key challenges, as in the case of many rapidly developing economies, while there is a great opportunity to create wealth, but it also brings its own challenges. And when doing business in India, the key challenges around the issue of bribery and corruption. In fact, this survey, which has been launched, the Global Economic Crime Survey, it ranks corruption as #1 constraint to growth, ahead of factors like electricity, access to finance, and access to land. India ranks 76th out of a total of 160 countries considered as part of TI's Transparency International's Corruption Perception Index of 2014. We moved to the positive by 9 places as compared to 2014, but that is also because 8 countries were not ranked during 2015. So really the position has not changed during the year. Complex and multiple regulations, their interpretation and lack of transparency are the next biggest concern for foreign companies considering setting up or expanding operations in India. For instance, one needs over 50 approvals and permits just to construct a building. So you can imagine how many points or how many government interactions that would require, where the companies could face a risk of bribery and corruption at almost every stage of the project, right from setting up a business to carrying out inspections or enforcing contracts. Another challenge during the M&A transaction that you've seen is is the entire cultural issues that are deep rooted in the country, where saying no is considered to convey an offensive message, and business is done on the basis of relationships. Indian promoters are seen to have a very peculiar mindset, and when you transact with small local businesses, risk of bringing over their practices could cause a severe damage to you as an investor in India. Hence, it is crucial to know in detail the background of your investee companies and its promoters, what their social and political profile is, and how relationships are directly or indirectly used by them, or rather disguised for unspoken malpractices for running the businesses, which could have direct impact on your overall performance and reputation. There has been high dependency on third parties and lack of awareness, which is another challenge, as third parties may not be aware or be legally bound by your requirements for conducting ethical business. Selection and background of agents, consultants, distributors continues to remain a risk from corruption perspective. And additionally, certain times we've seen during our reviews that compliance processes and controls at companies could be completely missing or be extremely basic. And even internal stakeholders and employees may not be aware of what to do or whom to report, as usually making facilitation payments is considered to be a usual business practice. So really, I think investors need to make a judgment whether the business is healthy enough from a compliance perspective for an investment. We've seen several deals in India, despite of being highly lucrative commercially, they have broken down at the last minute just because the promoters were not ready to put in an adequate compliance or remediation program in place. We'll now see some examples of documents which have come to our notice while conducting anti-bribery and corruption due diligence and investigations, and the kind of risks and evidence that could exist that would require one's attention or could put a transaction into jeopardy. So if we could move on to the next slide, where really these are certain sample practical illustrations for everyone to consider. What you see on this slide is an example of a code of conduct, which is a simple one-pager document and very basic in its form. As you would note, it's vague on anti-bribery and corruption aspects. Point number 3 just mentions that the company shall promote fair, transparent, free competition and sound trade, and it will ensure relationship and contacts with government agencies and political bodies are of sound and proper nature. However, it does not mention of any compliance framework in place. It does not quantify or qualify what a sound and a proper business relationship with a government agency could be. There is no coverage of private and commercial bribery as part of conduct, and it's very basic in nature. So I think it's very important to set the tone at the top and have the clauses transparently chalked out in the code of conduct or the anti-bribery and corruption policies, defining as to what is acceptable, what is not acceptable, and also to have a code of conduct which is not just in form but also in substance. It will not be okay to ask people to sign a code of conduct when actual bribery happens in full public view. Moving on the next slide. This is an example of recordings in the books and accounts of gifts and entertainment expenditure, another high-risk area as far as bribery and corruption is concerned. Here you can see on the top part, it's an extract of a voucher where expensive gifts have been given to government officers in the form of iPhones and silver souvenirs. The bottom of the screen shows an expenditure on the entertainment of municipal commissioners. Apart from incurring food expenditure of 500 rupees, there is some show to which the commissioner of a local municipality has been treated to, and one wonders as to what kind of entertainment is being provided and for what purposes. So one could really run into these issues when policies on gifts and entertainment are not adequately defined, especially in a country like India where gifts are demanded or expected to be given or received. Next slide, please. This slide shows payments from petty cash and employee reimbursements. Petty cash is an extremely common and a popular concept in India. It is usually a small amount of cash on hand that is used for meeting day-to-day expenditures rather than writing a check. And it is usually seen to be misused as records put into use of petty cash could be poorly maintained or can be extremely basic. What you see on the left side of the screen is a record on the plain piece of paper mentioning payments to sales tax department on a monthly basis of close to $100. And no other supporting documents or receipts, etc., which are attached. So really, one wonders again as to what the purpose of such a payment could be, and also it is difficult to find such petty cash transactions in books and records, because some companies usually record these transactions on a consolidated basis for the fortnight or for a month. Hence, it becomes extremely important to have a very clear policy on petty cash and to monitor those transactions. We have now seen companies who are moving to a strict zero cash policy for incurring expenditures. On the right hand side of the screen, you see an extract of a employee reimbursement voucher. Employee reimbursements are another risky channel of making improper payments, as employees tend to take advance money for incurring travel and other expenditures, and these expenditures usually get processed quickly unless they're adequately screened in order to settle the employee advances. What you see here is a full and final payment to the excise department of close to $6,000 US, which have been approved by no one else but the CEO of the company. Moving on to the next slide. The next three slides, in fact, are on third-party intermediaries. This one shows an extract of an invoice where third party has been engaged to procure a no objection certificate for fire for a rented premises. But what you see on top of the invoice is the website, which actually depicts that it pertains the TPI. This third party is a business of leather. So it really raises a question whether the TPI is in the legit business of procuring a license or a permit, or doing some other suspicious activities for the company. Next one. Yeah, this is an example of a third-party contract and how poorly it has been drawn. It's really a very broad and a vague contract, and broadly defines the scope of work of the agent, which is basically to negotiate contracts of sale on behalf of the principal. So the exact scope of work has not been mentioned. The commission, which is higher than the usual benchmarks in the country, is contingent if the company wins the contract of the product supply. Also, as part of this contract, what we see is a verbiage which is around conducting proper business, which mentions that no payments will be made to government officials and customer representatives, but in fact it was just mentioned for the sake of mentioning and not really monitored or enforced by the company in practice. Next one. This again is a TPI invoice, is a third-party intermediary invoice, which belongs to an advocate and has nothing but miscellaneous expenses for one particular year. So this raises it out on what exactly the consultant has been engaged for. There are no professional services which have been billed out to the company. And these are really certain risky words which are used while conducting business in India, such as miscellaneous expenditures, incidental expenditures, or suspense account payments, etc., which are really important to monitor. And it is extremely important to know who you're doing business with, because ultimately you will be responsible for third-party action. And the last one on the next slide, please. This pertains to donations, which is another common channel, either for making improper payments or for laundering money. It is seen that donor agencies are either directly or indirectly related to political persons, or do not exist or carry out legitimate businesses. Actually, here you see a picture of an address of a supposed school to which a donation of approximately $50,000 was made, which did not exist, as you can see, and the payment was actually made to be given to a political person for obtaining land approval. So these are certain illustrations, which one needs to consider. However, having said that, one can definitely make a successful and a profitable investment in India once a thorough diligence has been conducted and key risks have been identified. I will now hand it over to Will to talk about the components of practical and a contextual risk assessment program.
Thank you, Rahul, for that. And there's some very practical examples of some of the pitfalls, and many of those may not be entirely unique to India, but they are certainly characteristic of business in that kind of environment. I guess much of what we focused on in the session today has been really around risk assessment and understanding the risk, and I just wanted to take a few moments, conscious of time, to just reflect on where that sort of risk assessment sits within the wider scheme of risk mitigation, risk management. And this slide tries to set that out in fairly simple sort of graphic terms. So moving from left to right, we start with the all-important sort of top-level commitment that Rahul also mentioned. I mean, when you are going into new, perhaps unfamiliar markets, new cultures, etc., you need to be very clear about what you are trying to achieve, and that, of course, starts with what you're doing as a business, and we shouldn't forget that bribery risk is one of many regulatory and broader commercial and business risks that any company will face in going into a new market or expanding even in an existing market. So I think bribery risk does need to be seen in that broader context. But assuming you're clear about what you're trying to achieve, what your objectives are and your strategy for getting to that, then you need to be considering, well, what are all the risks that could get in the way of our achievement of those objectives, and bribery risk is clearly one of them. I mean, cynics might see bribery actually as a way of achieving certain objectives, and that is clearly what has motivated many people over many years to sort of since the dawn of time and the invention of money, really, no doubt, to provide inducements to get their way. But it's clear in the current environment that that is not a sustainable position to take. That bribery can cause immense damage to a company and its reputation and its ability to operate, and can potentially deprive it of its license to operate. So being aware of those risks, being really aware at quite a sort of detailed level of how the environment operates, and not assuming that you'll be able to do business in exactly the same way from one country to another, which is why it's quite important to understand the local environment in each market that you operate in. Once you have that fix on the risk, then of course it's critical that you respond to those risks appropriately, and that's really where that central box in the graphic comes in, looking at mapping your risk profile onto the controls that you have to mitigate those risks, which will help you to identify any gaps in policies or procedures, controls, etc. And being very clear about making sure your controls are properly designed to actually mitigate the risk you've identified, but also then genuinely operating, and that brings us into follow-up and monitoring and enforcement and so on, and reporting back, so that you get this sort of virtuous cycle of continuous improvement as you accumulate knowledge and intelligence about how things are working in a particular markets, India, for example. So, risk assessment is not an end in itself, but it is a critical element of your overall risk management program. You cannot effectively manage a risk if you have not properly understood it, and that risk is that process of identifying risk, evaluating them, really understanding the environment that you're operating in, or planning to get into, is absolutely critical, and keeping it fresh as things change. I mean, Rahul has painted a very clear picture that India is changing. I mean, the demographics of India have changed massively over recent years, and will continue to do so. The Indian economy is very dynamic. And it's very exciting, and if there's one message we absolutely want to leave you with is that India is a fantastic opportunity, and nothing we've said today is meant to discourage people from doing business there. It is simply to be realistic about the environment that you're moving into. So if we could move on to the next slide, please, which just repeats the message I've just said. I think it is a great opportunity. It is already the most populous country in the world, and it's going to be a very, very major economic player in the years to come. So it isn't about steering clear of India. It's about going into India with one's eyes fully open. And with that, I think we'll draw a formal part of the presentation to a close, and open up for any questions that have come in, or that you still want to ask via the little box that you can type into from now on.
Thank you so much for your excellent presentation, Will and Rahul. I have to say, for me especially, it's been really useful to know more about the Bribery Act and all the various risks around it, as well as quite heartening to see that more efforts and initiatives are being taken in India to address bribery and corruption. As you said, Rahul, if bribery and corruption is the main constraint to growth, then if you can actually do away with it, or you can mitigate it, then how much more can India grow and develop? So let's hope it kind of continues on that path. We have got a couple of questions, so I'll just start. First question is, do the anti-bribery steps in India apply to non-resident directors of an Indian subsidiary in the event of proven local bribery? Did you hear that?
Could you repeat that, please? Could you repeat the question?
Yeah, sure. The question is, do the anti-bribery steps in India apply to non-resident directors of an Indian subsidiary in the event of proven local bribery?
It'll apply when the current Prevention of Corruption Act is only applicable if it's only applicable if the bribes are paid to the government right, and to the government officers. So currently the Act is more on the recipients rather than to the payers of bribes. So it focuses on the recipients of bribe, not on the payer. However, if it is proven that the directors, whether resident or non-resident of Indian subsidiary, have been indulging in bribery charges, then under the Indian Penal Code, they can be prosecuted in the country. So not directly under the Prevention of Corruption Act, but yeah, with the IPC under the Indian Penal Code of the country, they can be prosecuted. Yeah.
And one shouldn't forget, of course, that any UK national paying bribes in India would fall within the jurisdiction of the UK Bribery Act. So they could be caught by both bits of legislation potentially.
Right. And also, I think I would like to add, and Will, you can chip in here, is that there's a lot of international cooperation going on between various regulators and jurisdictions. So as part of that as well, we've seen non-residents and citizens of other countries getting extradited to other territories, and notices are being sent out.
Yep. Thank you very much. I hope that answers your question. Moving on to the next question. So it's about the Sweet Group example you spoke about, Will. The question is, with the conviction of Sweet Group PLC under the UK BA for the corporate offence under Section 7 based on the activities of a subsidiary outside the UK, should this increased exposure for UK companies with overseas subsidiaries in India give us more concern and need for proactive measures over and above our group ethics program?
That's a very good question. Yeah, I mean, clearly, the UK Bribery Act is explicit that Section 7 is about bribery by an associated person. And associated persons can be employees. It can potentially be anybody, but the examples actually given in the Act are and repeated in the guidance issued alongside the Act are employees, subsidiaries, or agents. Now, it isn't necessarily the case that simply because a subsidiary pays a bribe that the UK holding company would necessarily be held liable. There has to be a little bit more to it than that. But it seems to me that it is a sensible assumption to make that any subsidiary could be viewed as, and certainly the UK prosecuting authorities would be straining every sinew to try to prove the case that an overseas subsidiary was acting in some way on behalf of the UK the UK head office. So whilst the law itself is doesn't state that categorically, each case is of course fact specific. But I think the implication in the question that's been asked is one I would wholly agree with, which is that of course any company that has overseas operations, be they subsidiaries or branches or whatever the corporate structure is, needs to be concerned about the way those overseas entities are operating and are conducting themselves, and all my experience is that corporates do see things that way, that they acknowledge that they are responsible for the conduct of overseas operations, and that therefore their policies and procedures are ones that they will seek to apply right across the group, wherever they operate. There are practical challenges, of course, around how exactly you implement a central global sort of set of policies and procedures in each individual country, and there may need to be local tailoring. For example, you may have a global policy that says, broadly speaking, we allow gifts to anybody of, up to a maximum of, such and such an amount of money, £50, but let's say for the sake of example. But if in country X it is simply illegal to make any gift to a government official, and there are such countries, or if the limit is lower than your group limit, then you have to reflect that in your local policies, because otherwise you're going to be breaking the law locally. So there is a need. Again, it comes back to the risk assessment. How aware are you of the environment that you're operating in, of the laws and regulations that you are subject to? But no company based in the UK can afford to ignore the conduct of its subsidiaries, nor can it afford to ignore the conduct of other associated persons, such as agents, of course, who are not subsidiaries and are not even in any way legally connected other than by contract, because they can equally expose a UK company to liability under the Bribery Act.
Thank you, Will. I think that comes down to your investee background aspect of key compliance challenges, where it's really important to know and to do your due diligence and be fully aware of the people that you interact with and the environment, as you said. The next question is a question from us at the UK IBC. I guess, Rahul, you could answer this. Would you say, in your experience of working with corporates in India, are there any particular states which you find are better at tackling bribery and corruption than others? Given that there is this whole movement towards competitive federalism, are there states which are doing better at it, in the bribery and corruption aspect?
Well, each state has started its own initiative. While there is a whole central focus which is there on the bribery and corruption, I think the movement has started across states. We see, earlier, for instance, the state of Bihar, which is on the eastern region of the country, which was there, was known to be highly corrupt at one point in time. However, a lot of initiatives have been taken to improve state-level corruption. It is getting a bit better. I will not say it's up there, but however, there are certain improvements. I think more than the corruption, I think what is happening at the state level is what each state government is trying to do is trying to ease up the business aspect, or doing the business aspect in that particular state. So as far as like I mentioned, single window clearances are concerned, or setting up specific tax exempted parks, or relaxing the state tax norms, etc. Those are concerned. So I think the focus is on there. Everyone is trying to do something on their level. So it really, one needs to see how it improves at an overall level. Like I said, that there's a lot to be achieved right now. We are still low on the bribery index. So I think the coming times will prove as to how it improves on an overall level.
Thank you. Thank you very much, Rahul. Actually, I have two more questions, but a slightly related question to this one. We did a survey last October on ease of doing business amongst our UK companies, and the main outcome of it was that they felt that the tone from the top was very positive and moving towards ease of doing business. Yes, everybody's agreeing, but when you filter it down to the bottom of the pyramid and the local government officials that you're interacting with at an operational level, there are always issues of bribery and corruption, and the clearances and all not going through, or there's sort of last minute changes, so that facilitation payments are required or needed to be made. How do you feel that can be changed? Because that's where the culture and mindset issue comes in. Do you have any thoughts on that?
Right. So absolutely, I think that's a reality, and it's an unfortunate reality. There is a lot of pressure, to make facilitation payments, especially at the lower rung of officials, as far as that is concerned. However, we have seen companies successfully doing businesses in India, and these are international big corporate organizations who have achieved this by having a very clear anti-corruption policy and having very clear guidelines around these. So as far as the Corruption Act, the Indian Corruption Act is concerned, as you would know, facilitation payments, any sort of facilitation payments, even gifting a pen, etc., is totally prohibited. However, companies have made a general courtesy, a beverage or a meal as part of their policy. Where the officials come and visit, and especially during inspection stages, usually that is when we see files getting stuck or inspections getting stuck. Also, I think the companies need to factor in the time which will be involved in getting a particular approval. A lot of times we've seen companies who do last-minute paperwork and want the approvals to come in on time, which unnecessarily creates pressure. So, however, as the best practices which you've seen here, the companies have successfully accounted for timelines and accounted for adequate paperwork that will be required so that the government officials, even though they solicit facilitation payments, they do not get anything in return, and it does require some bit of extra effort in terms of going back to government offices and maybe doing 2 extra rounds. But we've seen companies have successfully gotten their approvals without making any facilitation payments.
Thank you very much.
So I think the training and awareness, I think constant awareness and training and having clear guidelines would be the key to tackle this problem.
Yeah, thank you very much, Rahul. That sounds very sensible. A slightly sort of broader question. The question is, what have the two governments done or are doing to cooperate on upholding the UK Corruption Act in line with the Prevention of Corruption Act in India? So this is our last question. Sorry, just maybe both of you would like to chip in.
Well, perhaps if I can start from the UK perspective, and it's a good question. I mean, we obviously don't have any privileged insight into what's going on behind the scenes through sort of diplomatic channels, but what we can say is, first of all, that the UK government is making quite a big play at the moment around the Bribery Act and anti-corruption generally. People may well be aware of a speech made by David Cameron, the Prime Minister, in Singapore in September 2015 around his commitment to anti-corruption, which is manifesting itself in a number of sort of initiatives, for example, around the UK's very significant sort of diplomatic and political push for transparency as to beneficial ownership and so on. So one of the key factors that creates a fertile environment for corruption and makes it more difficult, of course, to monitor or to investigate is the lack of transparency around beneficial ownership of companies, which can be used as vehicles for either paying or receiving bribes. So the UK government is making quite a big play of that at the sort of G20 level, and we know that there's going to be a summit in the UK in May of heads of state, which is separate from the G20, but will no doubt include many G20 and others within it to discuss these issues. So this is something to which the UK government and indeed the Prime Minister personally seems to have attached quite a lot of importance. The second point is a point that I think was alluded to earlier, which is that the information and intelligence sharing that now happens routinely between many jurisdictions, and the UK, we know that the UK Serious Fraud Office has relationships with all of its counterparts in other major countries, and India will be no exception to that, and they will be sharing on a very regular basis, possibly, daily, weekly, whatever, information about, companies and individuals that one or other jurisdiction is watching or has concerns about or has received whistleblower reports of, or whatever it may be. That is just a constant area of activity now between law enforcement across the world. So I've no doubt that in that context as well, there is ongoing information sharing between the two, and that of course will be designed to assist both countries in enforcing their own laws and in helping each other to enforce the other's laws. So I think there is really genuinely quite a lot going on at that level, but Rahul may well have further insights from the sort of Indian perspective.
I think I completely agree with you. Again, from the talking from the India standpoint, like I mentioned that the existing Prevention of Corruption Act is undergoing a change, and it has been drawn on the UK Bribery Act itself. And once that comes through, I'm sure that it'll be at par with what the UK bribery provisions say, which will involve aspects of commercial bribery, private bribery as well, and also focus on the recipient side of corrupt payments. And I'm sure the more exchange of information will happen. As you would know, previously, for instance, in the Rolls-Royce case, which is under the UK Bribery Act, here the government of India also issued notice to the company and registered a preliminary inquiry with the Central Bureau of Investigation. Now, I haven't seen anything happening on the Indian side after that, but yeah, that is an example where the government is upholding the UK Bribery Act in India on similar lines, and similarly, like I mentioned earlier, examples putting to US FCPA where companies are getting prosecuted in the US, so Indian regulators are also sending notices here. So I'm sure there'll be a lot of exchange of information between the various jurisdictions, and it'll get stringent with times to come.
Thank you very much, Rahul. We have to actually wrap up now, but thank you so much. It's actually really positive to hear that both countries have joined hands to tackle this problem together, and hopefully, there's just successes going forward. Just to wrap up, I'd like to say thank you, a very big thank you to the speakers for your valuable insights today into this really important topic. I hope it was a very interesting webinar for you as well. If you have any feedbacks or comments about today's session or a session that you'd want to see us do in the future, please do get in touch. Thank you so much for joining us.